Yeah. Some more people coming in, but it's all yours, Carmen.
Okay, cool. All right, so I dropped a couple of articles in the chat earlier today and a question that I posed to the group. So I'm going to talk about a couple of those things, go over, why, because I posed the question and I kind of threw the idea out there yesterday of why it was important for us to care and follow up with like these billionaires in their lives. Like it doesn't seem like it should matter to us because it's their personal life, but their personal life trickles down to us indirectly. So we'll talk about that. We'll also talk about the Forex Factory calendar. I'm definitely not going to go over the Forex Factory calendar like I did on Friday. So if you kind of want to know how to tie together NFP from last Friday and the news we have coming out this week, definitely go back and listen to Friday's Zoom call, because I literally went through all the news items and just kind of summed up how we're going to be able to tie all this stuff together. All right, so I'm gonna head into the chat to the question that I posed earlier today because it's really important that we kind of think about our economy, not only for where we are now, but for where we're going. So the question that I asked was, do we really need a fourth stimulus package, or do we need to get people back to work? So the driving force behind any economy is having people that work, that help companies to make money so that the people can get paid, so that those people can spend money out in the community, out in the economic driving force. That's why we look at retail sales and stuff. And then when those people spend money with these corporations, the corporations make an income, and then the cycle continues. So having people that work essentially drives the economy. When we get to the point where we start talking about corporations using automation, which automation is not bad. I'm not, anti-automation, but it's the thought process behind having a balance between automation and manual hand labor from humans. So when we get to the point where it's mostly automation, we get to the point where we don't have humans working. Those humans are at home, and then we have to create new job titles, new avenues for people to be able to make income. But what that really does, because there are only so many places for people to go, people end up falling further and further down the ladder. That's kind of what COVID has done. That's some of the things that COVID has revealed. And the balance between what I asked, getting people back to work versus a fourth stimulus package. We see where the dollar is now. We haven't really experienced the full effect of what our stimulus packages have done, because that money still hasn't completely been paid out yet. So we're still trying to pay out money to the people from the second stimulus package. We just got the third one at the beginning of this year. So all of that money that we think has been printed technically hasn't all been printed yet. The IRS and the Treasury Department are still sending out individual stimulus checks still. So over time, we're definitely going to be seeing the true effects of the first, second, and third stimulus packages on our dollar. It wasn't going to ever be anything immediate. That's always been the case in history. Anytime there's been a stimulus package, like if you want to think back to Bush Jr., whenever he had his stimulus package that he sent out, it took almost 2 years for us to feel the effects of, that stimulus package. And it took 2 years for it to truly, affect our economy all the way across, for you to start seeing it in all avenues. So we've gotten 3. And now the question is, do we need a 4th? I put an article in the group chat, or it was a snippet of an article, where there are actually Democratic opponents now to a fourth stimulus package because they're starting to look at the economic data, and it's actually showing that people are not using the money in the way that the stimulus package was intended. And people might say, well, the government gave me the money, I'm going to spend it how I want to. No, the government gave you the money to spend it the way they wanted you to spend it to stimulate the economy. Paying off debt does not stimulate the economy. Investing does not stimulate the economy. Why? Because you're not spending it. Even though you might be spending out the money and it might not be in your hands anymore to pay off debt, you're not actually giving that money to a company or to a business for them to turn around and buy raw materials. That's what the government wants that money to be used for, to actually stimulate. So when that money isn't stimulating the economy anymore, but it's leaving bank accounts, then they're like, okay, well, maybe we don't need a fourth stimulus package. I recently posted a link in the group chat that where Biden said, well, people who are on unemployment, long story short, they're applying for jobs and they're not accepting these jobs, then they're going to have their benefits stripped away. On the state level, that had already been somewhat of a requirement, not so much that you had to take the job for some states, but that you apply, you actually go through the process of trying to actually get the job. So there's a lot of things in limbo right now when it comes to a fourth stimulus package, but it's definitely going to be something for us to look at because it's going to affect our dollar. It's going to affect the value of everything that we hold that we could potentially get cash value for. Because at the end of the day, that inflation that we keep talking about, that inflation is going to ramp up and start coming about when the gap widens between the value of our dollar and the value of assets. So if you paid $600,000 for a house and the value of the dollar drops, and let's say you still want to keep your house on the market for, or you want to put your house on the market for $600,000 or more, that's inflation right there. Like that's, and you might not even think about it that way, but that it's a individual form of inflation. And so when you think about how that happens all across the board with millions of people trying to do the same thing, that becomes a problem for the economy. All right, so some of the other things I can talk about as we go over the Forex factory calendar, which I'm going to pull up for you guys now. Okay, so today we didn't really have a ton of news. We just had a speech from one of our Fed members. Tomorrow we have a speech from the Bank of England Governor Bailey. So one thing, especially since we had the breaking news today with Boris Johnson saying that the UK was going to be lifting some of their COVID restrictions, we're definitely going to be listening to this speech tomorrow from the GBP to hear how they now plan to move forward with their monetary policy. They've had one of the strictest monetary policies of any developed nation, of any top 10 currency because of COVID. They went into one of the most strict lockdowns. And now that some of those restrictions are being lifted, how are they planning to acclimate people to being outside again, shopping again, working again outside of the home? How are they planning to handle the influx of people into the marketplace? Because think about it, they haven't really had a time period that was good and stable coming out of Brexit. Feel like we haven't talked about Brexit in a long time, but they still have a lot of import export issues. Trying to get things into the country to fill up grocery stores was an issue before COVID. It stopped pretty much when COVID happened. So they weren't getting a lot of the imports from the other European nations that they had been getting. So now that the restrictions are being lifted, now that they can kind of get back to quote unquote normal, we'll definitely see how all of this fares and plays out with the UK. But I'm glad they're starting to lift their restrictions. That will be, maybe they'll take the lead for some of the other countries out there who have had tight restrictions, thinking, okay, if the UK is doing it, maybe we should do it, especially countries that still have a Commonwealth law with the Queen and with, the Queen, essentially. So Caribbean islands, Australia, New Zealand, Canada, some African countries. Even though all of those countries and places that I just named didn't go into a really tight restriction, some of them did, or they have halted imports or exports from certain places because of COVID, only because the UK did it. So we'll be looking forward to hearing what the governor says tomorrow. And I'm only going to go up to Wednesday because we'll have a Zoom call on Wednesday, and then I can cover the rest of the week. But Wednesday, as you can see, we have a lot of news coming out. So just starting at the top of the morning, we'll have preliminary GDP data. So how much the economy grew or shrank. We'll be looking at that for the GBP. We'll be looking at the EU economic forecast. We'll be having another speech from the Bank of England governor. Then 8:30 on Wednesday morning, we get consumer price index numbers. So this is really going to start telling us what the story looks like for our inflation here in the United States. I've already told you guys that commodity prices were up. Commodity prices have been going up steadily over the last like 4 or 5 weeks. So I'm expecting that consumer price index numbers are going to be at or greater than forecast. And over the next year or two, I expect that consumer price index numbers will continue to grow, only because the Fed is expecting inflation to grow over that period of time as well. So that's that. Crude oil inventories. All right. So I've been posting in the group about the Colonial Pipeline, how, there was a cyber attack and they had to shut down the pipeline. It came out that a group in Russia was behind the attack. And so over the weekend, Biden declared an emergency because of the oil. So what does that mean when a president declares an emergency over an oil pipeline? So essentially that gives the engineer and the overseer at the starting point, so in Texas, that gives the regulator, I should say, permission to request oil from the U.S. Reserve should it be needed, or to request oil be brought in on an emergency need. So that happened over the weekend. On my way home, I passed 6 gas stations and all of them had lines out to the road. I told you guys over the weekend, prepare, plan accordingly. Be prepared, because anytime you hear anything about an oil pipeline being shut down or a shortage or anything like that, know that when it hits the public, the first thing people are going to think is, I need to go fill up my tank. I need to go get a gas can. There are no gas cans, by the way, at least not where I live. So you're not going to be able to find some of those things now. So like as soon as you start hearing news about anything like that, the first thing you should do is figure out if it pertains to you. And then if it does, plan accordingly. If you don't have to go somewhere and you can save the gas that's already in your car, do that. But if you have to travel and you might, have to drive some distance to and from home and you're uncertain about what the supply might be like, just make sure you fill up, make sure, you have a gas can. When this is all over, if you don't have a gas can, I highly suggest you get one. And if you don't want to keep it in your car empty, at least keep it at home. That way, even if, you're somewhere and you might need it, someone could possibly bring it to you. But what does this mean for oil? So oil started ticking up over the weekend. I was watching it tick up over the weekend when I was telling you that oil was getting kind of volatile. It's uncertain at this point when they're going to open the pipeline. They want to open it as soon as possible, but they have security patches that they have to place inside of their software. And then they also have patches that they have to do to each employee's computer. So while there are employees that might be working from home, employees that are in different office buildings throughout each state that the Colonial Pipeline goes through, each of those systems has to be updated. So once that's secure, once the system is, ready to be brought back online, of course, they'll bring it back online. But this is one of those things that I was telling you guys about at the beginning of the year. It never fails that something happens throughout the year that will cause oil to be very volatile. Oil had a very tumultuous year last year. It dipped into the negative price range. Now it's time for oil to recoup, and we're definitely going to be recouping throughout the rest of this year. We haven't even hit, Memorial Day yet, and we're already seeing gas prices tick up every day, at least 2 to 5 cents. So keep that in mind. Oil is definitely going to be something we look at it every week, but we'll be definitely paying more attention to it. And as I get more updates about what the Colonial Pipeline is doing, I will let you know. And then we have bond auctions coming out Wednesday after that news as well. Somebody asked me about gold Friday, and I didn't think about it until after the Zoom call, that there is a correlation between the bond auction and gold. So when we're looking at the bond auction is pretty much you could call it a safe way to store money. It's like a guarantee. And then you have your treasuries and stuff like that as well. So I remember who asked me. I'll send you a chart so you can see what it's like, because some people might not trade gold. Some people might not care about bond auctions and stuff like that. And it gets kind of technical. So for the person who asked me, I will send it to you on Telegram so that you will see the correlation. And it's actually a pretty cool correlation because it correlates for part of the year, while the interest rates, as they increase, if the base rate correlates with those and goes up as well, gold correlates. But then if they flip, gold flips. But you'll be able to see it on the chart. It's kind of technical, and I already sound like I confused. It already sounds confusing. So I'll show it to you on the chart. All right, so I was kind of not necessarily speed through this next part, but it's not like a whole lot of detail that I have to go into for talking about billionaires and lawmaking. So why is all of this important? Why do we care about Jeff Bezos and whether or not Jeff Bezos is with his wife? And why do we care about Bill and Melinda Gates? Why do we care about, Warren Buffett? And why do we care about their personal life? Because whenever billionaires, and these are people who have a net worth of billions, when they go through personal issues, you have to think, what is the first thing that goes through your mind when something happens? Like, you want to protect yourself. You want to make sure that you're good. And while, yes, what Jeff Bezos is slightly different than the issues with Bill and Melinda, the underlying theme is the same. They're going to protect themselves, and they're going to do whatever it takes to make sure that they can pay out as little as possible, or that for whatever else they have to pay out, that they're protected. So with Jeff Bezos, you know, him and his wife got married out on the West Coast, and the state you get married in is super important. But in addition to that, when you have billions, you can lobby. So you have to think Jeff Bezos is the CEO of Amazon and is considered to be a tech company as well as a retail company. So they have people who lobby for them in Washington for laws to get things passed, to get things done. That's why Amazon has been able to spread and become the brand that it has become today. Microsoft, the exact same thing, having lobbyists in Washington to lobby for certain laws, to lobby against things. When you have people like that in Washington, you're paying them millions of dollars to get up there and speak on your behalf and make sure that they can give a kickback to a senator, or that they can, you know, lobby or petition certain people to make sure that they get things done. Why is that important for Jeff Bezos and his situation? Not necessarily so much on the wide scale, like, you know, individual type level, but for businesses and for corporations, what Jeff Bezos is trying to do now and what he has been doing, even though you don't necessarily see it in public or hear about it on the news, is get laws out on the West Coast rewritten so that companies that he had structured under Amazon and companies that he had structured while he was married can operate separately. And then also so that those companies can get special privileges and permissions from the government, from the EPA. And those things are things that we could benefit from as people. But when you have people that are lobbying for you, you can make sure that those things get done. As far as Bill and Melinda, their situation is something that will affect all of us. And I say will affect all of us because ever since 1994 or so, Bill Gates has been making these very strategic relationships. Hence the reason why they're even getting a divorce anyway. But he's been making these very strategic relationships. And in the process of him making these relationships, it has come out over the years that he's paid anywhere from $100 to $200 million just to get a law written. For instance, he has a collection of cars, and the emission rules that we have to follow, he doesn't have to follow for his cars. But recently under Trump actually adopted a lot of the laws that Bill Gates had lobbied for him into law. So a lot of the things you see in the EPA now, they were actually done during Clinton's administration with Bill Gates. So whenever you have billions, you can have a lobbyist go write a law for you. I know I've like repeated that a lot of times, but I'm like summing this up. You can have somebody go write laws for you. And those laws will essentially be put in the books for everybody, not just that one person. So what am I expecting from Bill Gates right now? A lot of these child predator laws that we've seen over the last like 2, 4, or 5 years or so, you will start to see some of those laws rewritten. That's the whole purpose behind why they're even getting a divorce. Melinda started this whole process back in like 2019. I was reading some of the documents that have come out, and there were allegations that were made. There were pictures, you know, Jeffrey Epstein came up. And so in order to protect himself, protect his name, protect his brand, you know, and all of his philanthropy and stuff, you know, he's going to have somebody go lobby for him on his behalf. So things like that will change. When you start talking about having people that will lobby for you, marriage laws will change. So it's important to know what the marriage laws are in the state that you live in, whether you have to split, whether you don't have to split it, blah, blah, blah. But you'll start to see a lot of that change as well. Because, at the end of the day, if they decide to get remarried, or even if this divorce proceeding lasts for, more years, new laws that go into place, he could possibly have it set up so that the new laws are actually applied to their proceedings and not the old ones. So yeah, a lot of that stuff, it doesn't seem like it affects us. It doesn't seem like it should matter to us. But, when they have money, they can go and have laws written, and then that stuff ends up affecting us. Everybody on this call has kids, or a lot of people on this call, I should say, either have kids or married, want to have kids, want to be married, own stock, are investors. That should be everybody on this call. So all of those things, they start to affect us when they have their personal issues, because they're trying to protect themselves. And in trying to protect themselves, they either help or screw over everybody else, just so that they can get out of Dodge. But anyway, I'm gonna go ahead and turn this over to Mr. Levels so that he can get started with the technicals, and I will put that chart in the Telegram chat for the person that asked me about gold on Friday.
Cool beans. Oh man, we appreciate that, Carmen. Good job. Yeah, I'm gonna go ahead and jump right into these technicals, everybody. Yes. So, looking at the dollar for this week, we've been in a slump, of course. We know this for a very long time now. And we're probably going to continue to be in a slump. However, in the short term for this week, we could potentially see the dollar rebound a little bit. So I am expecting to see the dollar give us some bullish momentum this week. Give me a second. So, of course, we know we trade time and price. And so we'll be waiting to see how London market open up at 3 a.m. And depending on which way London markets open, we'll be looking for New York markets to give us some same momentum, should I say. So let's look right at the currency pairs and see what we should be looking at out of these guys this week. So we already know if we're expecting the dollar to start out bullish this week, then we know we want to see our currency pairs start out bearish, because we understand that our currency pairs move opposite of the dollar. So let me get this off of here. So with that being said, being that we want to see the dollar open up bullish, I definitely want to see Euro USD open up the week bearish. And we could get a good reach on Euro USD this week. We got lots of imbalance to the downside in price action. So we're definitely going to be waiting on time and price to set up for London market. And we'll take it from there when New York open. Moving right on to GBP USD, same thing. Um, we know it moves opposite of the dollar, so we should see some bearish momentum out of GBP USD to open up the week. And moving over to NZD USD, something similar. Yeah, so we'll see how price action move throughout the rest of tonight. May see price go ahead and reach for this little imbalance we have here for the rest of Asian and Tokyo markets tonight. And then when London open up, we could either see a real aggressive bearish move to the downside, or we could see um, London give us some bullish momentum off of this imbalance, setting us up for the trade going into New York. So we'll have to wait and see how time and price set that up. But I do want to see NZD, USD, along with GBP USD and Euro USD give us bearish momentum starting out the week. So we'll see. Looking at silver, let's look at our metals. See, silver gave us that push last week. Now, we got all this imbalance to the downside. If we see a reach, um, definitely want to see these lows right here cleaned up. See, you got that area of liquidity right there. See price come down and grab that. We'll see how that play out. Looking at gold, yeah, gold being gave us a nice move off of that structure right here. Now I want to see gold come and fill in this imbalance. We'll probably see that to start the week out with, especially if we get that bullish movement out of the dollar. We understand our metals inversely correlates with the dollar, so meaning they move in the opposite direction of the dollar, like the currencies. So let's see what the dollar do to start the week. And looking at oil, um, we got above that structure, and being with everything that Corman gave us on the fundamental side, definitely expecting to see oil prices rise. So we'll be keeping a close eye on oil, and I would like to see how London market opens. If we go ahead and break to the upside, definitely be looking to buy oil throughout the rest of the week. And last but not least, US 30. This is last week's high on US 30. I want to see US 30 start the week bearish and give us a bearish move to the downside. So definitely looking for that play to set up during London markets for time and price. So may see a slight swing up for London market to come in and fill in this imbalance, and then push to the downside for New York. So that's one scenario. Or we could just come back and retest this structure here. And then go ahead and push to the downside. We may not come back up to fill in this imbalance right here. To start the week, we may just come to this structure, and then for London, we may see London push up, retest this structure, and then push down for New York. Or we could see London go ahead and push down and give us some pullback to this order block right here. Basically this engulfing candle right here. That this red candle that engulfed this bullish candle, this bearish candle right here, that engulfed this bullish candle. We may see price swing back throughout London markets and then come back up to fill in this for New York. So we just have to see what time and price give us, but I'm betting that we see some bearish movement out of U30 this week to start the week out with. So that's what I want to see out of the market for U30. And we'll wait and see what time and price give us. So at this time, I will take any question.